Hey scholars, welcome back to this video. This is second video for your practice questions. So let's begin our question number 9. And this is one of the most important questions in terms of trickiest questions. The selling price of inventory is given to you $268,000 and the company makes a markup its goods by 34%. So you need to understand the difference of markup and margin. I think you already have gone through this topic. So markup is the profit percentage taken on the basis of cost. So it means if your cost is 100%, that's the base value, and your profit is 34%, your selling value is 134%. And this selling value is already given to you. So now you need to solve it. This is selling price. The company makes a markup 34%. Obviously, when you are going to calculate the cost of goods sold, the selling value is known to you 268,000 is at 134%. You can divide it by 1.34, or you can just divide 134% multiply by 100, or you can just do this shortcut. 268,000 divided by 1.34, because you want to know the cost of this, and this cost of this is 100%. So the cost of this value is $200,000. We calculated the cost of goods sold from given selling value. And now 1/4 of the inventory, mean this is the total inventory cost. 1/4 of this, which is 25%, and that becomes 50,000. You can calculate 200,000 times 25%. It is 1/4. But remaining one is 75%, which is 150,000. Take the difference of 200,000 and 50,000. So this is the remaining value, good value of inventory, 75%. Okay, this says 1/4 of the inventory has been damaged in the flood and will be sold out for $19,000. Which of the following will be correct value for closing inventory at 28 February in the statement of financial position? So we have no doubt that we have good inventory with us, 150,000. There is no problem in this type of inventory. But the problem occurs, this inventory has been damaged and the cost of this inventory was 50,000. But its NRV, mean net realizable value, is given to you, means its selling value is given to you 19,000. According to the prudence principle, the cost of inventory and the lower of these NRV and cost, whichever is lower, we will take that into consideration. 50,000 is not lower value, 19,000 is lower value. If you add 19,000 with the good inventory, and this 19,000 is coming from the rule of prudence, the cost of inventory and NRV, whichever is lower, we will calculate this into calculation of total inventory. So total inventory becomes 169,000. The answer is C. I hope that you understood the trick. In this type of question, what you need to do, if the selling price is given to you, you need to just calculate the cost by using this formula, markup and margin formula. Once you are done with the calculation of cost of goods sold, this is entire inventory cost, out of which 1/4 was damaged, but 75% was not damaged. Take that 75% as it is, but we can just compare the value of cost of 25% and NRV of 25%, whichever is lower. And then we finally found our answer, 169,000. So let's go to question number 10. Here we go. Question number 10 says, in the context of financial accounting, which of the following is not a characteristic of an asset? By the way, students, you need to understand the meaning of an asset. Just to clarify your doubts, assets are considered the financial resources controlled by an entity as a result of any past event or any past transaction, and future probable benefits are associated with these resources, or you can say future economic benefits are probable to flow to the inventory. So I repeat my words: assets are the economic resources which are controlled by an entity as a result of any past event, and any future economic benefits will probable flow to the entity. Now I gave you three words: future probable benefits, this is characteristic; controlled by business, this is characteristic; as a result of past transaction, this is characteristic. But point B is not coming under the characteristic of an asset, because I told you asset are the economic resources controlled by an entity. Because I don't want to go into more details, controlled by an entity means, let's suppose you are having leased as lease asset, and majority life of the lease asset is under your control, that becomes your asset, right? So the final definition of asset is an economic event, an economic resource which is a result of a past event and controlled by an entity, and future economic benefits will probably flow to that entity. That's it. So that is not a characteristic of an asset. Number 11, most important question in terms of its calculation, because so many calculations are involved in this. So let me make it zoom here. On 1st January 2018, the equity of company 5 was as follows. Share capital: 150,000 shares were already issued. We call them outstanding shares. This is 150,000 shares already outstanding. And one share was having par value 50 cents. And in this way, your total existing share capital was 75,000. Share premium, which was the result of issuance of share at more than par value, was 145,000. Then revaluation reserve, then we have retained earnings, and collectively we have owner's equity 460,000 pounds, sorry, dollars. On that day, company made a right issue, issuing 120,000 shares for 7.5 each. Okay, so you can just calculate 120,000 shares was issued at 7.5. It means out of 7.5, 0.5 is the par value, which will be directly influencing the share capital. 60,000 will increase your share capital, and 125,000 multiplied by 7, this is going to give you $840,000. So this is going to be inclusion of your share premium. So share premium updated value would be 140,000 plus 145,000. So total share premium is going to be $985,000. So that is your updated share premium value after you issue right shares. And updated share capital would be 60,000, this one, and already we have 75, so 75 plus 60, so your total share capital becomes 135,000 so far. Okay, let me go further. And then they issue 4 bonus shares for 1 already held. Okay, here we go. They say we have issued 4 bonus shares for already who is having 1 existing outstanding shares. But we need to know how many outstanding shares we have already. So we have 150,000 this one, and 120,000 issued as a result of right shares. So 150,000 plus 120,000. So total number of issued shares are 270,000 shares. And 1 bonus share will be given to those who has already 4 bonus shares will be given to those who has already 1 share. So it means total number of bonus shares will be 10,180,000. I am using my calculator. 10,180,000 will be bonus shares. Now the question is how this bonus shares will be accounted for and from where we will take the money. So if you look into the question statement, the company offsets the bonus issue against the revaluation reserves to the extent that is possible. Okay, here we go. We have the revaluation reserve of only $30,000. So we need to calculate how much money to be used in the bonus calculation. So we have 10,180,000 bonus shares multiplied by 1 share costing us 0.5. So this is gonna give us, I'm using my calculator. So I need to know that, yeah, $540,000 are needed to cover the bonus issuance. But the question is, from where we will use this 540,000? First of all, they said we need to use revaluation reserve. So revaluation reserve will be fully utilized, means 30,000 will be fully utilized, and we are left with 510,000. Okay, but now the question is from where we will cover this 510,000. Obviously, our last resort is retained earning, but before retained earning, we have share premium. The updated balance of share premium is 985,000. So if we use 985,000, our share premium balance, we can use 510,000 from there, and then we will be left with 475,000 share premium with us. 475,000. 510,000 is taken from share premium, and then we are covering with our bonus issued. Okay. Final value left with us from reserve, sorry, share premium is 475. So 475 is option D, but option B is also possible. But we have to see how much is our share capital now. Previously, we issued 150,000 shares in the beginning, then 120,000 shares in the next as a right shares, and then 1,080,000 shares as a bonus share. So total number of shares become, let me use my calculator. The total number of shares are 1,350,000 number of shares, and each share is costing us 0.5. So it gives us $675,000. That is our updated balance of share capital. And share premium was initially just 145. We increased the share premium to 985,000. We reduced the share premium by 510 because it will be used for the bonus calculation, and the last value of our share premium would be 475,000. This was a little bit tricky question, but if you use your tricks step by step, it will be very easy question. Now the answer is D. Answer is D. So option B is correct answer. Means option D is correct answer. Next question. This involves the accrual application accrual system. Company 7 has made the following payments for invoice issued by local water supplier in 15 months. 1st February 2017 to 30th April 2018. So here we have the data from 1st February till 30th April the next year. The company received these water invoices. These are the invoices received periodically within 2 weeks of the end of the period for which they relate, okay, and then paid those invoices within 1 week of receiving them. Fine. What will be the expense appearing in company's income statement for the year ending 31st March? Students, you need to understand, if the year is ending 31st March, then year is starting from February 2017 till 31st of March 2018. If the year is ending at 31st of March, it means the year was started at 1st February. So we have been given these invoices. We need to know how much cost belongs to this period ending at 31st March. This is the closing date. And opening date according to the year ending must be 1st February 2017. Now you can see this invoice starting from 1st February 2017 till 30th of April 2017. We need to account for 450 is not for entire year. We need to divide it from February, March, April. It contains 3 months. We need to have only 1 month because yeah, it would be starting from 1st April, sorry, not 1st February. So it would be starting from 1st April till 31st of March. So 1st April would be the first month in this question. Okay, out of this 450, we will divide this by 3 months and it will be 150. We will be using only for April because our year is starting from 1st April. So 150 will be taken into consideration. 425 will also be taken into consideration because this belongs to this period. 395 will also be taken into consideration because this belongs to 2017, year 2017. And 425 will also be taken into consideration or calculation because this belongs to this year ending at 31st March 2018. However, there is a point. 480 is the expense starting from 1st Feb till 31st of April. We are ending our year at 31st March. So it means February and March will be taken into consideration. Divided it by 3, it will give you 1 month. How much is the 1 month? 120. So 160. 160 is for 1 month, and we need to take 2 months because February and March will be taken into account. So it is gonna give us 320. If you add all these expenses now, it becomes the expense of the year ending at 31st March, starting from 1st April 2017. So we are accruing, we are using accrual accounting, and the total of all these will be 1,1715 dollars. That's the answer is B. So B is the correct answer. I hope you understood this question.